Okay, everybody, it's me, Gregory Mannarino. It is, at least I think it's me. Crazy day. Yeah. Okay, so anyway, yes, it is me. Monday, May 2nd, 2022. People, what a day. What a day. What a freaking day. Did I say that? Yes, sincerely. We had a market here. I mean, we're talking all over the place. The Dow Jones Industrial Average, stocks across the board getting hammered. The Dow, everyone loves the Dow, was down over 500 points. Well, guess what? We reversed all of that and finished in the positive. More importantly, let's see where this goes. The S&P 500 is now above that 4150 level that we were watching for a while. Kind of interesting. I explained to you that this may happen. We could fall below, try to break out above that again, hammer up against it a few times. If it don't work, well, then you could expect more losses here. But what a crazy day. I don't know another way to put it. The 10-year yield, are you watching it? 3%. No surprise to a single one of you that follow this blog. We will be settling above 3. I expect it to bounce around a little bit. We probably will go lower, bounce higher, lower a little bit until we actually settle there. 3.25, 3.27 would be my short-term kind of best guess here. Again, why? Market's pricing in what the Fed's going to do moving forward. That's how the markets work. And I think, honestly, once the market realizes what's happening, look, I know how many of you are practically on your knees begging for this market to crash. And some of you believe it is already crashing. Well, we're not crashing, okay? We have an S&P 500 in a technical, it's a technical correction, all right? Look it up for yourself. Not too hard, okay? A full larger than 10%, not more so than 20, is a technical correction. I know a lot of you keep pointing your fingers at the NASDAQ. Let's look at the NASDAQ. The S&P 500 is the broader market, okay? So that's where you really should be looking at. Yeah, sure. Tech has gotten hammered. Why? It's a phenomenon that you and I have spoken about. The tech sector, for whatever reason, is very interest rate sensitive, yield sensitive. Okay, so it's in an adjustment period. Does this mean it's all over? That we're going to melt down today? No, absolutely not. There's nothing irregular here or singular or whatever you want to talk about going on here with regard to the debt market. You and I realized a while back we were going above 2. We would settle above 2. Then the Fed started talking about raising rates more. I said, hey, we're going above 3. Market's going to settle above 3. And I also said the market's going to love it. Look, I know a lot of you out here are so fixated on this market crashing or whatever it might be. Why? Really, why? Why are you not more concerned with being in the right spots, staying diversified, realizing that certain parts of your portfolio may not perform exactly like you wanted to do in the shorter run, having an understanding of the bigger picture here. All I am concerned about, and all you should be concerned about, is the inevitable move of cash, the tsunami of cash that is eventually going to come out of the debt market first, okay? And that's going to destroy the stock market. Look, many of you, it seems, are locked into something that I find disturbing. What's the stock market doing? What's the stock market doing? Look at the debt market first, people, and you're going to be a lot better off, okay? The debt market is the driver. Why do you think? Let's ponder this for a moment. Why do you think? Okay, for example, the Federal Reserve has decided to inflate the debt bubble. Well, and artificially suppress rates for now over a decade. So they would inflate the stock market. That's what happened here. It's the debt market, people. How many times must I repeat myself? It's getting stupid with regard to the dollar strength. Oh, Greg, you're wrong. Look at the dollar. Really? The comparative strength. I'm not even going to say relative because I don't think that word is registering with people. Its comparative strength is higher. And you knew this was coming from, I can't even tell you how long ago, because I said it would happen. I am not right all the time. But look at my record. I am right most of the time. And I'm telling you, we are not in a crash. I don't care who's trying to sell you that. We are not in a crash. The economy's cratering. As a matter of fact, listen to this. We got some, this is the news from today. The U.S. manufacturing PMI unexpectedly fell. Really? How could that be? Because they just admitted that our economy is shrinking. And then the ISM new orders index also fell. Lovely. Incredible. Look, this is how it's going to go. The bad economic news, to my surprise, how about no, is going to continue. The easy money is going to continue. The market is in some kind of a, well, by definition, is in a correction. Okay? Oh, Greg, you're wrong. It's not in a correction. We're crashing. You're just too blind to see it. Really? Oh, maybe if you don't believe me, you want to just open up a new search engine right now. What is the definition of a market correction? Don't believe me? Maybe you'll believe Investopedia or wherever else it might turn up. I can't make that up either. It's impossible to do. But I can't tell you, look at the comments. Greg, you're wrong. This market's crashing. Greg, you're telling people to do the wrong thing. Really? By telling people, let's see, to be diversified, to be in large cap dividend paying stocks, collecting that dividend, maybe selling puts around these things, 20% out of the money that expire out 30 days, constantly pulling premium. Oh, that's just a bad thing. Oh, yeah. And not every position, has done badly. And then you're also diversified into, obviously, places you need to be. Hard assets, physical silver, my favorite of all time. I'll keep saying it. Cryptocurrencies, yes. Cryptos today, all right, we didn't do too bad. Hovering around 38, 39,000. Gold and silver did take a hit. Imagine my surprise when you have a mechanism, people, in place. Where the derivative, think of what I'm saying. What is a derivative? Let's define that. A derivative is something that derives. You notice the connection here. I know a lot of you have problems with words. A derivative derives value from another asset. Okay, but when we're talking about gold and silver, the hard assets here are deriving value from the derivative. It's upside down. So when you got major banks or whoever out here dumping paper onto the market, what do you expect is going to happen? It doesn't exist. You see, it doesn't exist. A derivative bet is a side bet on a particular asset. That's all it is. And in case you don't know, there are layers and layers and layers and layers of derivative bets on one single asset. Multiple layers of derivatives. No one even has a clue as to, nobody. It's impossible to know the actual value of the twisted derivative market. It's out of control. It's in the quadrillions. Probably beyond whatever comes after quadrillion. Well, that's what we have. And when you have a market set up like that, you get this kind of shit. Okay, you have global debt surging higher at its fastest pace ever in history. Okay, you don't believe Greg Mannarino? Look it up for yourself. Okay, and meanwhile you have gold and silver really pretty much doing nothing. Are you kidding me? Anyway, look, so that's the story. A pretty profound turnaround here in the market. 10-year yield doing what you and I expected to do. The comparative strength of the dollar staying high. Imagine my shock. No, you knew that. And a market now, the S&P 500, which is, we'll see where this goes. Let's see if we either break much lower here, because it's interesting. I mean, now we are at that key level yet again. Are we going to drop down below it, or are we going higher? I don't know. You let me know. Personally, I don't really give a damn, because all I care about is the big meltdown. And all of you out here that just don't get it, I don't know why you're here. I am concerned about one thing, and that is the big meltdown, which will occur in the debt market first. So get your stinking eyeballs off of the Dow Jones Industrial Average and focus on the broader market, absolutely, but look at the driver. The driver is this hyper bubble in debt, which is not going to stop until it bursts. And when it bursts, we're all going to know. Again, you're going to see that rapid spike in the 10-year yield that I've been explaining. We are not seeing that right now. We're getting a market pricing in rate hikes. That's it. And they're not bang, 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 bang. It's kind of a nice, interesting slope here. That's what's going on. So if you're getting all worked up about a market crash, which we are not crashing, okay? This is a normal correction. We've been in a corrective phase for like 4 months. And in case you don't know, that's not out of the norm either when we've been in a stock market that has done nothing but go straight up for freaking years. People have made so much money, myself included, in this stock market over the past X amount of years that I think maybe it's okay once in a while that we give a little bit back. Don't you think so? I mean, it's getting kind of stupid, okay? This market has made me a millionaire. I'm sure it's made a lot of you a millionaire too. Probably multiple millionaires because of this blog. There's no doubt about it. But anyway, look, you guys got the story. You know what's going on here better than anybody else. If you're getting rattled, get out. Get out of the market. All of it. Maybe even precious metals or cryptos. Just do something else with your time. I am certain, really, that you could find something else to do. Maybe I'm wrong, but I don't know. I believe that, look, those of you that follow this blog are clear about where my head is at. From a financial standpoint, we could not be better off than we are now. We are diversified across a spectrum of assets. We are holding long positions in assets. Some are doing very well, some not so well. Where is it written? Show me where it's written that an entire portfolio must all go up in tandem. Show me that. Okay, maybe one of you can because you're so illustrious and perfect and you can tell me, how about that doesn't happen in reality? Maybe you think it does, but it don't. So you want to call me out for this, that, and the other thing? Have the guts to point in the directions where I have been correct, but that'll never happen because you can't do it. There's always an agenda going on here, but the people that follow my work know where I'm at. I got your back. I even got the backs of you who don't like me for whatever reason. I want you to win. I want everybody out here to freaking win. There's no reason why we have to lose, unless, of course, you want to listen to people that have been calling for market crashes every single month, every single week now for years and years and years. They've been wrong 100% of the time. Well, they're going to be right now. Eventually, and it ain't now. They're going to be right, okay? Because I've told you we're going to get a meltdown in that debt market that's going to cause the biggest market crash in history that's going to eclipse every single market crash before it by exponents. There's going to be nothing like it. It's coming. It absolutely is coming, but it's not going to be in the market itself, the stock market. It's going to start in the debt market. There's nothing going on here. If you think there is, show me the proof. Show me the proof. You have an open stage here. Post in the comments where I've got this wrong. Considering the fact that the S&P 500 is 13% off of a record high, which is a technical correction. You want to point at the NASDAQ? Go ahead. Okay. Let's talk about the broader market. Show me where the debt market is imploding right now. I dare you. I dare you. I dare anybody. I don't care how many letters or titles you might have. Anyway, look. You got this. We all got this, all right? And if, like I said, I don't rattle. I am not rattled at all by a damn thing that I'm seeing. Do I have some level of disappointment? Of course, in certain aspects of my own portfolio. But like I just said earlier, this has been a free-for-all for years. If you have not made money in a market that's done nothing but go straight up since Donald Trump took office, it hasn't stopped pretty much until just January, okay, where we entered this period, then you are doing something seriously wrong. You should have been lining your pockets with cash like there's no tomorrow. Literally. So, oh my, what a concept. You mean to tell me that because your portfolio hasn't performed straight up in the past 4 months, you want to throw in the towel? It's all over? Really? Is that what you want to do? You're in the wrong spot. You got to get out of this market. Go find something else to do. Go fly kites. Go roller skating. I don't know. Go swim with the fishes or something. I have no idea. Go have some fun. Go on vacation. But this ain't for you. Ain't for you. All right, people, look. What did I miss? I told you about the market. Incredible turnaround. I told you about the debt market here. 3%. I think we finished slightly low, 2.999. Okay, 3%. We're going to settle above that. The comparative strength of the dollar remains high. Imagine my shock. You got gold and silver under pressure. Crypto's doing okay. Crude oil turning around, catching a bit earlier in the day. Finished higher after being markedly lower. But I don't think anything here at all is a surprise to you. I really don't. And if it is a surprise to you, let me know what you're so surprised about. Shocked? Scared? Terrified? I don't think you're scared. I don't think anyone here is scared. Anyway, this guy here, right here, loves you a lot. And I mean that. And I will see all of you later. Going to be lovely, perfect. No, I'm not going to see you later. I'll think about you later. I'll think about a lot of things later. I'll see you in the morning.